Hi guys, welcome to this upcoming week forecast, where we're going to talk a bit about what we anticipate the market to be doing in the coming week. And as you've all seen from last week's forecast, bullish dollar, we have seen dollar rally all the way into the 92.065 level, of which that's where I was expecting price to find what? Resistance. So our outlook from last week came fruitful. We did manage to get some plus or minus 300 pips on the four assets: dollar index, USDJPY, EURUSD, and GBPUSD. And for those who followed through with USD CHF, USD CAD, and that's specifically for longs, those trades paid out handsomely. And also for gold shorts, they paid out handsomely. So now, looking at the week ahead, with the move that we saw in dollar last week, looking at the upcoming week, I'm still of the notion that dollar is going to keep pushing to the upside. But that does not mean we're not going to face resistance. It does not mean that sellers won't try to push price down. As you can see, the move from January up until the current price, we have had 3 consecutive bullish months on dollar. So I'm really expecting dollar to stretch it a bit to the upside before we could start seeing what? Some stiff resistance from the sellers. So with that said, looking at the monthly chart, you could see price traded all the way into the opening price of that last up close candle, which is now our what? Our bearish order block. So that was clear as daylight. Price was gonna face some bit of resistance there, and it happened on Friday. That's when price found a bit of tug of war between the bulls and the bears around the 92.065 price point, which was to be expected. So if we go to a weekly chart, if we go to dollar index weekly chart, you can see the bearish order block clearly defined here on the weekly chart. This guy here, remember, that guy has been in focus for quite a few months now. In fact, the past 3 months. Only last week, that's when we had a clear close above and price didn't look back. That's significant. That is quite significant. That's a break in market structure. That's an institutional market structure which has been broken to the upside, thereby telling us, okay, we could see a proper move to the upside on the dollar, right? But with that said, we should not neglect stiff resistance around the 92.265, this area here. Now this becomes our bearish order block, and you can see on Friday price did found a bit of resistance there from the bears. So take note of this bearish order block here. This price zone here is going to offer some opportunities to short the market. Where are you going to be shorting the market to, right? Price will look to trade into these levels here, right? So that's 1 and that's 2. These 2 price points, that's around, we're looking at 91.47 and 91.120. That's the area. If you are going to short dollar, that is the area where you should be looking as your target zone. Now, for me personally, I'm not gonna look to be shorting the what? The dollar. I'm still bullish. But from which zones am I going to be bullish? The same zones that I've mentioned to you. If price does come down, then I am bullish from 91.50 or 91.20. Take note, I've only highlighted the institutional price points. I didn't go 91.130. No, I just highlighted 91.20, which is an institutional price, and that's an old high. That's an old high of our weekly bearish order block that has been broken to the upside. You see, that is an old high, and what rests on old highs? We've got liquidity on old highs. So I'll be expecting price to at least retrace to 91.50. From there, I am going to be hunting for long positions. Already, if you're in the mentorship group, you know already that we are holding a long position on dollar index, most probably from the 91.20. Yes, if I'm not mistaken, we are holding a long position on dollar index, and we are also holding a long position, a short position on Euro USD. So we'll see how the market opens for us to make a decision whether to continue holding those long positions, because we already have like what, plus 250 pips on those two assets only. So now when we go to a daily time frame, you can see that the zone that I'm anticipating price to pull back into is here. Now, what's more interesting, when you look at price action, right, you can see we had imbalance there. Let me just zoom in a bit. For price imbalance here, price never filled up this gap to the downside. There's an imbalance there, right? Now, how then are you going to trade that setup? This is where you have to frame. This is a clear good setup for a low risk trade idea, framing low risk trades. Now, when I said I'll be anticipating price to drop down into 91.50, so we've got 91.50 roughly here. So this is 91.50. That is after we've filled the imbalance. I'm expecting price to rally up, or 91.20. Right. Now, on 91.20, you can clearly see we've got a new fresh level there of demand. That's a new fresh level. Those who came to the class on Saturday, you know exactly what I'm talking about. We've got a new fresh level of demand. As price moves higher, it creates new pockets of demand, right? So I'm expecting price fill up the gap, trade to the upside. If the gap does not hold, remember you have to be reading the price action. If there's a big bodied candle that closes below that imbalance, then I'm gonna wait for price to drop into my new fresh level that has been created. Now this fresh level, this is where our long entry on dollar index is, roughly down here. This is where we took the long entry on dollar index. If you're in the group, you know already on Tuesday I sent this trade to go long on dollar index. Reason being that this down close candle, this was just enticing the retail world to go short, yet in actual fact they were just running stops that were below, right? Because this move to the upside shows us displacement, the institutions they were buying. Now when we had this down close candle, market was enticing people to short, and I bet you most of the retail world, they shorted dollar index, they went long on Euro USD. Come Wednesday, Thursday, and Friday, those orders, they were tossed. So you need to be very critical when you look at the market structure. When you read the chart, be critical, think properly. Don't just jump in and say, no, this is what's going to happen. And now we have had a clear break in this whole structure from 3rd of December up until the up until like 5th March, which is like last week. There's a range which has been created. Market was just playing in a range. Now we have a clear close above that range. That's a change, a break in market structure. Now, so I'm expecting price to drop down into the 91.50 zone before I start considering adding more long positions. Or if this level does not hold, if I have a big bodied candle that closes the gap, then I'll be anticipating price to drop all the way into the 91.20 or even the 91 price point. So I am still bullish on dollar, guys, and make sure you look at the bond market, how the bond market is performing. Performed very well last week, and both 3 interest rate strides, the 30-year, 10-year, and the 5-year, they are all strong bullish. So you need to keep an eye on those, because once we see the 10-year bond notes, especially the 10-year, once we see them facing a bit of stiff resistance around that 1.12, 1.13 price point, that's the bond market, guys, then we would anticipate dollar to drop a bit. But as it is, dollar is strong bullish. Dollar is strong bullish. We are going to be shorting EURUSD. We are going to be looking for shorts on GBPUSD, and then on USDJPY we are also long. You can see there's my entry, my long entry on USDJPY. My long entry so far, I'm holding it for 152 pips. And then I've got a short here on EURUSD, holding that trade for close to 170 pips. I also have a short trade on GBPUSD. Let me just show my trade levels so that you guys can see. It's in this up close candle here. They were enticing people to trade long, yet in actual fact market was going down. I'm holding that position with a couple of 116 pips. So this is not an overnight thing, guys. If you are new, especially those guys who wants to join, or if you are new to the group, make sure you put in the work, study the charts, study all those macroeconomics that help you to make your decision when you're opening the trade. So regarding EURUSD, I'll be expecting price to at least correct to this level here, specifically the 1.20. Yes, price might not go back up there. That's something you have to anticipate. Price might not go back to that level. Now what then do you do? Okay, so I'm going to highlight clearly. This is now our bearish order block, right? This is now our bearish order block with a mean threshold around 1.20675, which would be an optimum entry for your long position. But now we've got a significant, since we are shorting, we have intermediate low high here, and we have this extreme swing high. Then we've got this low here that was formed on Friday. If I'm to place my fibs from the high to the low, you can see where the equilibrium price point is way above this bearish order block, right? But if I do this, from this swing high to Friday's swing low, watch what happens. This is what happens. Look where my equilibrium price point is, 1.20645. That's the equilibrium point. This is an ideal area for you to be hunting for short trades. and you can see the confluence that's surrounding the idea. You've got a bearish order block, right? With that bearish order block, what else do you have here? What is this? What is this? Right? That's your liquidity void, right? Market was just offering sell side liquidity. So if I'm to delete this, let me just make sure the chart is clear, and so that you can see how you see this low, the low of the down close candle, which came after the bearish order block, the low of that candle, and the high for Friday, and Friday's high. There's a liquidity void. There's a fair value gap there, which you should anticipate price to fill up, because market was just offering sell side liquidity going all the way to the downside. So I'll be personally anticipating this level here to be filled, and once that is done, I'm hunting for shorts. You see, I'll be selling Euro USD. So price point above 1.2038 and 1.2067, an ideal zone for you to be hunting for short trades on Euro USD, with your stops way above Wednesday's high. Because once we break Wednesday's high and trade above, then we are looking at price going all the way back to 120.1678. So the same applies when you look at dollar index. When you look at dollar index, you come to your daily. You see this candle here. But the moment price approaches this down candle here, which is now our bullish order block, price will be in a discount zone. That's an ideal area for you to be what? To be a buyer, because we'll be looking at the level whereby, okay, no, it's quite cheap now to go long on dollar index. So with that said, guys, make sure you understand what I've just said, and if you have any questions and you are in the group, just send me a message, guys. Don't be scared to send a message or anything. Send a message, and then I can help you to further understand what I just explained. So the whole basis is that we are bullish on dollar. We are still bullish on dollar. Bullish from which level? Right, 91.50. Or if the 91.50 does not hold, we are looking for price to drop all the way into the 91.20. So those are the levels we're going to be bullish on dollar. And the moment those price points are reached, you know exactly what to do on EURUSD GBPUSD. That's short, and longs on USDJPY, USD CHF, and USD CAD. So unfortunately, if you are not a member, you are only seeing this Wednesday morning or afternoon, and you have probably missed the train, because I'm offering the video first to the mentorship group so that they watch and grasp what we are looking for, and to the public, this video will only be available after Wednesday morning, sorry. So with that said, I wish you guys good luck and happy trading in the upcoming week. Thank you.